Automakers have revealed plans to accelerate the electrification of new vehicles, including trucks. Over the next 10 years, the majority of significant automakers intend to introduce dozens of new electric car models. Many of these businesses have committed to eventually ceasing production of fuel-powered vehicles and are setting sales targets for electric vehicles. Tesla is a significant player in this market, as seen by its amazing automobile models and designs, which have not stopped impressing investors and enthusiasts of electric vehicles. Hi everyone, welcome back to Tesla tomorrow as they work towards their electrification objectives. Over the next 10 years, automakers intend to spend billions of dollars on R&D and the construction of new manufacturing facilities, mostly for the production of batteries. Due to growing environmental concerns, increased model availability, increased cost competitiveness with conventional gas vehicles, and longer vehicle ranges, demand for EVs has surged dramatically over the last 10 years. Over the next 10 years, it is anticipated that these reasons will continue to fuel higher adoption rates, with the widespread availability of tax breaks and other government initiatives serving to further encourage this trend. Is there no competition for Tesla, given that it is leading the way in the world in the adoption of electric vehicles, and is probably going to produce the majority of those used in the future? Elon Musk has acknowledged this himself, in fact. What is said by Musk? Hit the like button if you enjoy this kind of stuff before we continue. Keep watching to discover out. Enable notifications and subscribe to be informed about all things Tesla. Elon Musk, the CEO of Tesla, has acknowledged that Chinese automakers are the company's main rivals. He describes Chinese automakers as the most competitive in the world and says he has a great deal of respect for them. In addition, Musk claimed that Chinese consumers are the most astute and hardworking, making the Chinese market the most competitive. Musk acknowledged that Tesla is in competition with these Chinese businesses, speculating that the winner will most likely be a Chinese company that ranks second to Tesla. Musk went on to say that Chinese electric vehicle manufacturers have cutting-edge software designs that may influence the direction of the auto industry. China's large consumer base and robust central banking system make it a valuable market for the automotive sector, especially for electric cars. It is the second largest market for Tesla, and sales, a big component of Tesla's business strategy, is selling electric cars in huge quantities in China. China is a great place to manufacture due to its developed industrial production chain and ability to produce lithium-ion batteries. In addition, the nation's ability to produce electronics and rare metals is essential for the production of essential electric vehicle components like electric motors and batteries. In China, electric vehicles are a big business. By 2022, the market will account for 2/3 of all electric vehicle demand. Tesla, which started manufacturing cars in its gigafactory in Shanghai in 2019, is not the only company producing electric vehicles in this market. Other electric vehicle markets still rely largely on financial incentives and subsidies. China has entered a new phase where people compare the features and costs of gas-powered cars to electric ones, mostly ignoring government backing. For China to establish the groundwork for its electric vehicle industry, almost 10 years of infrastructure spending, long-term investments, and subsidies were required. The market will begin to stand alone. After finishing its gigafactory in Shanghai in late 2019, Tesla expanded rapidly in China beyond 2020. This is advantageous for the corporation for a number of reasons, one of which is that manufacturing in China spares Tesla from import duties on completed vehicles. Since China is a major supplier of auto parts to the global market and an ideal location for electric mobility and smart grids, it has been the ideal location for Tesla. There are several Chinese manufacturers of electric vehicles, and they all pose a serious threat to Tesla's declining market share, given that demand for its vehicles has recently weakened in China, where they currently account for 40% of the company's sales. While Tesla's statistics fell more than 40% in December of last year, BED, its primary Chinese rival, and other Chinese manufacturers reported enormous sales gains towards the end of the previous year. Particularly in China, BED is regarded as one of Tesla's main rivals in the electric vehicle market. Indeed, the majority of investors think that China, which has had several years of exceptionally fast growth, is catching up to Tesla, the global leader in electric vehicle sales. It's crucial to remember that Tesla is still in its infancy, and that if it produces less vehicles than 5, it doesn't mean that it is performing below expectations. While BYD leads by sales volume, Tesla leads by profit margin. As of 2022, Tesla is the top-selling brand of electric vehicles worldwide. This is the first time that Tesla has outperformed all other automakers in the market. Tesla's profit margin on sales of cars is far higher than that of its Chinese rival. The company sold 1,175,321 passenger electric vehicles in the first 3 quarters of 2022. This covers plug-in hybrid vehicles as well as purely electric vehicles. However, BYD outpaced Tesla in terms of delivery figures by about 30%, and on net profit per vehicle sold, BYD outsold Tesla by 908,573 over the same time period, with a net profit of $8.87 billion in the first 3 quarters, which is usually reported to be a net profit of $1.14 billion during the same time period. Tesla leads by a wide margin. Furthermore, compared to BYD, which made $11.90 in profit each car sold, Tesla made $97.61 in profit per vehicle, an 8-fold increase. It's possible that investors are beginning to understand Tesla's enormous potential in the electric vehicle industry. Nearly 6 million BYD shares were recently sold by Berkshire Hathaway for a price of roughly $145.38 million. One of the most successful and well-liked investors of all time, Warren Buffett, had sold shares of his company to people before. Previously, the company had sold a portion of its stock in an electric vehicle startup. As per a report with the Hong Kong Stock Exchange, Berkshire divested less than 1% of its BYD holding, leaving it with 219 million shares, or roughly 20% of the outstanding stock in the company. Without a doubt, BYD stands to be a formidable rival of Tesla, but the company is thriving in China. However, Tesla faced a competitive disadvantage in the Chinese market as long as the vehicles sold there were made in the United States. For example, importing automobiles from California came with significant costs, high tariffs, and taxes on imported goods. Since goods represent an additional expense, the government's more generous electric vehicle incentives were primarily intended to assist state-run businesses and did not extend to imported automobiles. The storylines around domestic electric vehicle manufacturers, like BYD, may be shifting now that Tesla has begun to reduce the price of its cars in China. BYD was able to undercut Tesla on price thanks to purchasing incentives. Tesla has made a significant contribution to the Chinese auto industry by supporting regional vendors and assisting local workers in acquiring useful new skills. The existence of the electric vehicle startup has also compelled nearby automakers to step up their electric game. Let's just say that both parties gain from the partnership. China gains access to the most inventive manufacturer globally, while Tesla gains access to the biggest auto market in the world. When entering the Chinese market, Tesla had 3 goals in mind. First, to increase its market share in the largest electric vehicle market in the world. Second, to avoid being forced by China to form joint ventures between foreign automakers and Chinese manufacturers. And third, to safeguard the intellectual property integrated into its expanding range of electric vehicles. With its investment in China, Tesla became the first international automaker to demonstrate that it could function entirely independently of China while maintaining 100% ownership, marking a significant turning point in the industry. On the other hand, because automakers were compelled to cease operations in China owing to the pandemic, China has developed a lucrative trading environment for the automobile firm. Amidst the difficulties faced by multinational automakers such as Toyota and Volkswagen in restarting their production lines, the Chinese government moved to great lengths to assist Tesla in promptly returning to production mode. After a few months, Tesla's Shanghai Gigafactory resumed car production at a rate of 3,000 per week, more than it had been prior to the shutdown, paving the way for a successful market debut into China. To fully capitalize on the new technologies that are now available in the nation, market entrants, especially auto companies, must reconsider and alter their products. That is precisely what Tesla accomplished with the EV, taking use of supply chain and manufacturing innovations that are exclusive to China on the demand side. Tesla built a solid reputation for itself by meeting the needs of investors and consumers for high-end, prestigious, well-designed, and functional goods. Do you think these same things? Please share your thoughts in the space provided below. If you'd like to learn more about Tesla's recent activities, click the following video to view it on your screen.